Welcome back everyone to the Audacious Witch channel, where we talk about the magic behind the stock market. AMD and SNAP stock are both down over 30% last year. This year, AMD stock is already down 9%. They recently reported very good numbers, but both stocks were down a lot again. What is the deal? We know both companies are the underdog in their own industry. So does that mean they are uninvestable, or is Wall Street giving out free money to us right now? In this video, first I need to tell you the truth about AMD stock. Then I will get into SNAP. Jeremy, of course, is lying to your face again about AMD.
It's deceiving though. Deceiving.
Here I am. I'm walking into this party. And meanwhile, everybody's walking out. And they all got frowns on their face. And they're like, this party sucks, man. Don't go in there. It's not even worth your time. We've been at this party. Nothing's going on. And I'm like, dude, the party's about to start. Like, well, you just came to the party too early. Like, what are you doing? Like, you didn't come to the party at the right time. Like the party's going to get going around midnight, around 1 a.m. That's when we're going to start partying. Y'all came at like 7 p.m. and thought we were going to have a party. What kind of party did you think this was? And so that's how I feel coming into AMD stock and starting to buy the stock now is people, the sentiment's very negative. They're calling it advanced money destroyer.
AMD.
AMD, Lisa Su leading this company, usually a little more on the conservative side. My guess is they probably do $8 billion to $9 billion of revenue in this quarter they're going to report. By far, this is going to be their best quarter. And I don't think it's in too distant in the future that AMD is going to start putting up $10 billion revenue numbers for this company.
Now, if we look at revenue, first off, up 24% year over year, very strong number from 6.2 billion to 7.7 billion.
My guess is they probably do $8 billion to $9 billion of revenue in this quarter they're going to report.
He totally didn't tell you the kryptonite of AMD. No, it's not NVIDIA. I will explain. 2024 was a lost year for AMD. I was wrong. Yes, I still own AMD. If you want to make money right away, if you want to ride a nice uptrend, you are looking at the wrong stock here. AMD stock is not turning around for a while. Here is why. AMD reported better than expected fourth quarter earnings results and gave a slightly better than expected outlook for revenue in its current quarter. Still, the chip stock tumbled as much as 10%. The culprits were some underlying numbers in the company's data center business, along with weak commentary about its outlook for data center AI chips. AMD's December quarter data center revenue came in at $3.86 billion, only went up 69%. Last quarter was 122%.
Their latest quarterly numbers came in at $3.5 billion of revenue. That was up 122% year over year,
which was below the $4.14 billion estimate. The miss suggests the strong growth for AMD's core x86 franchise, where it has been gaining shares from Intel, could be slowing. Jeremy never told you this. AMD also faces a rising threat from ARM in the server CPU market. Microsoft, AWS, and NVIDIA have designed ARM-based server CPUs for cloud data centers that are increasingly taking shares from the x86-based chips made by AMD and Intel. I think ARM stock is where the Wall Street park their AMD money. And that's the kryptonite. The coming threat isn't just on the server side. Last month, I predicted the next logical move for NVIDIA would be to make an ARM-based CPU for consumer Windows laptops, which could further crimp AMD's client PC x86 business. I believe that will happen sometime this year. But the commentary around AMD's AI GPU business was the most concerning for investors. CEO Lisa Su suggested the company's AI GPU revenue for the first half of 2025 would be flat compared with the second half of 2024. disappointing Wall Street, which was hoping for a stronger secular growth ramp. Su also said AMD would stop giving explicit numerical guidance for AI GPU sales, which also worried analysts. Less transparency is rarely a positive sign. AMD lacks NVIDIA's ability to deliver an end-to-end data center solution. It won't have a competitive offering against NVIDIA's Blackwell GB200 NVL72 this year. NVIDIA's AI server incorporates 72 GPUs all linked together inside one server rack that's roughly 2 feet wide, 4 feet deep, and 7 feet tall. These superclusters of network GPU servers, which can power increasingly complex AI workloads, is where the demand is, and AMD is far behind NVIDIA. Now let's get into the Snapchat. The Santa Monica, California-based company beat analysts' expectations for user growth on its Snapchat app after focusing more on video content, reaching 453 million daily active users in the fourth quarter. Profit, excluding certain items, rose to 16 cents a share in the period, topping the average projection of 14 cents. Snapchat has been recommending more video content to users as it seeks to compete with rivals like TikTok and Meta's Instagram. The company recently updated its algorithm for ranking video content to help boost engagement. Last quarter, Snapchat users spent 25% more time watching videos than the year prior, which in turn has lured advertisers to buy more ads on the site. That trend could continue if TikTok is ultimately shut down in the US, since Snap is likely to benefit from a possible ban. The threat of China-based TikTok going dark has already pushed some creators to reevaluate where to invest their time and build audiences. Advertisers are also seeking out stable TikTok alternatives and ways to diversify their marketing strategies. The overall environment of uncertainty is benefiting our business. Certainly, advertisers are very focused on contingency planning and diversifying their spend. CEO Spiegel said, "I think the same goes for creators who are really thinking hard about how they can build the most diversified engagement with their fan base across various platforms, including Snapchat."
You're seeing like a scoreboard above the basket. It says who has the most points and then the leaderboard.
Well, one of the things that's really cool about this lens is that it's connected.
Snapchat subscription product, which includes access to an AI-powered chatbot that can recommend restaurants or identify objects from a picture, now has 14 million subscribers and is on track for more than $500 million in annual revenue, based on fourth quarter sales. Last year, Snap unveiled a new version of its Spectacles smart glasses, which overlay digital filters onto the physical world and could eventually serve as a new source of revenue for the company. Snap has invested heavily in AI and machine learning technologies to power those new products and services, to more effectively place ads and to better recommend video content. The company said it plans to spend slightly above the $1.5 billion it spent in 2024. Snap uses Google's Gemini AI model in Snapchat app. Snap reported better than expected earnings and EBITDA exceeded expectations. Daily active users increased by 9% year on year, reflecting continued engagement growth. Snapchat Plus also kept seeing very impressive subscriber growth, and Snap is seeing a massive upswing in free cash flow. In my opinion, Snap has considerable upside potential regarding its Snapchat Plus paid subscriber model, and the company's improving profitability profile could help underwrite valuation gains for the social media platform in 2025. Snap has considerable momentum in its core digital advertising business as the social media company generated $1.56 billion in revenue in the fourth quarter, showing 14% year-over-year growth. It was also the fourth straight quarter of double-digit revenue growth for the social media platform. In the trailing 12-month period, Snap added a massive 39 million new subscribers to its business, and this net growth was mainly driven by markets besides North America and Europe. Snapchat Plus gives users access to early features, including AI tools, which has proven to be instrumental in increasing the number of signups. At the current rate of growth, Snapchat Plus could grow to 35 million subscribers by the end of fiscal year 2027. Subscriber growth in Snapchat Plus, as well as potential subscription plus increases, could be levers for the social media company to boost its organic revenue growth going forward. Because of Snap's aggressive cost cuts and headcount reductions in the past 2 years, continual ARPU gains, and success with its paid subscriber model, the social media company has fundamentally improved its profitability profile. In the fourth quarter, Snap generated $182.4 million in free cash flow, which represented a year-over-year growth rate of 65%. Snap's strong Q4 24 performance in terms of free cash flow is also the reason for the massive fiscal year 2024 upsurge in FCF for the full year. In fiscal year 2024, Snap saw a 6 times increase in its free cash flow. For the first quarter of fiscal year 2025, Snap plans with $1.325 billion and $1.36 billion in revenue, which implies 12% year-over-year top-line growth. I think they are lowballing the number to surprise us later. Snap's considerably cheaper than its larger social media rivals, and the social media company currently trades at a 33% discount to its longer-term, 3-year average PS ratio. I believe Snap shares have more room to rebound. If Snap revalues to the industry group average PS ratio of 5.3x, the social media's company shares could about double in value to $21.60 per share. Therefore, my fair value estimate for Snap following Q4 24 results is between these two price points. Snap could be a potentially lucrative investment in 2025. However, any stock needs to have momentum to run. If a stock only has negative momentum, it will go down like AMD. While Snap stock has been put into a penalty price box, both of these need a boost to start running. This game is more simple than you think. It's all about momentum, just like a plane needs momentum to take off. If you want a stock that just took off, check out my Cloudflare stock. I believe that is the next Palantir stock.